Kirsten Grind is a New York-based reporter for the Wall Street Journal, where she covers the mutual fund industry and asset managers. But before that, she had a 5-year career approximately in Seattle, first at the Seattle Times, where she covered biotechnology, the Port of Seattle, and Snohomish County, and then at the Puget Sound Business Journal, where she became its banking reporter. Her series of investigative stories about the collapse of Washington Mutual and an in-depth series on the foreclosure crisis garnered a Pulitzer Prize finalist citation in 2010, along with numerous other national awards, and the book that brings her here tonight. It's called The Lost Bank, The Story of Washington Mutual, the Biggest Bank Failure in American History. Joining her on stage is John Talton, the economics columnist for the Seattle Times and editor and publisher of the blog Rogue Columnist. For more than 25 years in this community, he has covered business and finance, specializing in urban economics, energy, real estate, and economics and public policy. And he's managed to complete 8 novels along the way. So please give a warm town hall welcome to Kirsten Grind and John Talton.
It is such a pleasure to be here at this Civic Treasure, Town Hall, Seattle, and to welcome back my friend, Kirsten Grind, who has a must-read new book, not only for people who really cared about Washington Mutual, but for anyone who's interested in the peril that our financial industry poses and the a really untold story of the great meltdown.
Oh, thanks, John. And can you hear me as well? No? Yes?
Okay.
That's better.
I will convey that to Vladimir. now they have us up mic'd a little more. I will tell you just a couple of pieces of my part of this story, which is not much. Is that I had soon arrived here and was starting my column, and I had just been run out of Phoenix for calling the real estate crash ahead of it happening. And so in my role as a columnist, I had to tell Seattle that Washington Mutual was in the middle of a bank run and going to go down, and do it without making it worse. But the other thing was that after all was said and done, on one very, very rainy day, Kirsten and I found each other at some incredibly dreary meeting over in West Seattle, and I don't even remember what it was, and if you held it, I don't mean to offend you. But I said to her, "This is the story," and she went out and got it, told it, and is the definitive go-to person on Washington Mutual. In your book, after a prologue that could be out of a thriller, like the kind that I wrote without like a gunfight or a sex scene, you don't start out with Carrie Killinger, and you don't start out with No Doc Loans. You start out with Lou Pepper. Why?
Lou Pepper. I don't think he's here tonight. I actually emailed to ask if he was going to be, but a lot of you probably know Lou Pepper. He was the longtime CEO of WAMU in the 1980s, and there's a very important reason I started out with him, and that's because he was really responsible for saving WAMU from a crisis in the 1980s, and he was the one that built it into this very solid regional bank. But most importantly, he was the one that really infused it with this friend of the family culture that the bank really came to be known for. I started out with him because he symbolizes, Lou Pepper does, what our banking system used to be. It used to be all of these small community banks that we all could go to and speak to a teller, and people would know our names. And you saw over the trajectory of WAMU's story and over the course of the book how that really changed and fell apart. And Lou embodied that old banking system that we used to have before most of the banks. Right now, you know, we have 5 banks running the country, basically. He really embodied that old time that we don't have anymore.
And Lou was risk averse. And when something was brought to him that didn't pass the smell test, he called it
Yeah, absolutely. Lou would, if there was something that he didn't like, he would just call it as it is. He would sort of say, "This is just crazy. Like, I think all these people are crazy." Like at the time that Lou was there in the 1980s, everyone was into like buying commercial real estate loans and making all these developments in California, and people kept trying to get Lou to make these commercial real estate loans, and he kept saying no. And he had to stand up at shareholder meetings and defend his actions and say, "This is why we're not doing this, even though this bank down the street is making a lot more money." Well, sure enough, the next year the bank down the street had failed, and WAMU was still there with Lou standing at the head of it.
And he would say, that's goofy.
That's goofy, exactly.
But on the other hand, he hired Kerry Killinger, a money manager guy, somebody who had no banking experience, no experience in the thrift industry.
Right. Kerry Killinger was brilliant. He was a brilliant guy. He could read charts as fast as anyone. He could sort of see all the financial trends as they were. He knew what the next big thing was. He was not someone that you could really make conversation with well in the elevator. He sort of lacked charisma and he was very young. But Lou had built this team of executives around him in the early 90s that he just thought was this winning team that could go forward and move the bank forward.
And and Kerry is not some guy who came with a Harvard MBA, grew up on Long Island, blue blood pedigree. Tell us a little bit
No,
about the Kerry Killinger before what
right.
he became.
Before, yes. He is from Iowa, and he had this very sort of Americana childhood and grew up very middle class. Put himself essentially through school on a scholarship, was very hardworking. Was taking all these classes, was working two jobs, was very into his music. He's actually one of his family members who didn't get into the music business. So he was just this very sort of down home type of guy that everyone could relate to.
And his father was a well-known trumpeter, right?
Exactly, and his grandfather.
And Kerry repaired musical
He
instruments.
did, and he met his first wife as in the band class in high school. So he had this sort of very typical childhood.
Now, I want to go into something for just a second that might seem like banking arcana, but I think it will come back around later in our conversation. And that is that Washington Mutual was a savings and loan. It was a thrift. It was not a bank in the way that commercial bankers would say. And it survived the savings and loan scandal and meltdown in 1991 in no small measure because of Lou Pepper. The banking industry really wanted to make all the thrifts go away. They succeeded in doing away with the FSLIC. They came under the FDIC. The banks always hated the thrifts. The thrifts were set up, they came out of the 1930s to help people buy homes. They were statutorily required to hold a certain amount of mortgages even once they got into gambling. And um, and the mortgages put them at risk in downturns. And yet under Lou, Washington Mutual was able to navigate this quite well. Later I'm going to come back to how Washington Mutual's status as not really a capital B bank might have hurt it politically.
Mm-hmm.
But right now I'd like you to maybe talk us through how this very respected thrift, Kerry Killinger takes it and he goes on a buying spree.
He goes on a buying spree. I'm actually glad you brought up that mortgage point because, look, it's not a bad thing to make mortgages. Banks have been doing it for years. That wasn't the problem. And WAMU had a very healthy mortgage operation for a lot of years. So Kerry Killinger takes over this bank in 1990, and he, like you said, goes on this buying spree. This was a bank at the time with about $9 billion in assets. And this team of executives, They were like the dream team. They just steamrolled across the country, buying all these other savings and loan banks. The bank was growing rapidly. Every year it was increasing its assets. So in the span of a decade, it had become the country's largest savings and loan bank. And Kerry Killinger was the front of this team. He was the one that everyone saw. And so he literally became America's favorite banker. I mean, there was no one more popular than Kerry Killinger in the late 90s, early 2000s. He was winning awards. The analysts loved him. The shareholders loved him. The bank was profitable. It was just an amazing, it was an amazing time. Lou Pepper thought he had created this amazing dream team, and he had. It was a great run that they had.
Hugh McCall Jr., who was the big guy at Nations Bank, who bought Bank of America, and took the head of B of A in the backyard and nicely put a bullet in the back of his head, and built Bank of America. Hugh McCall Jr., who was the master of banking acquisition, said, the hardest thing to do is grow.
Mm-hmm. It's very hard. And WAMU was very good at it. They had this down to a science. I mean, look, when you're combining two gigantic banks, think of all the computer systems and the headaches that you have to deal with, and they just did this as if it was nothing. They just had it down so well. They created this concept you all may have heard of, free checking. They were the ones that created this and forced every other bank to jump on board. They also had these sort of kooky branch concept called a Casio, which would allow someone to walk in a branch and like the teller would stand next to you, sort of like we now see in Apple stores, right? And they would sell these teller dolls, and your kids could go like watch TV and things like that. I mean, they were just known as this very friendly family bank.
Tell us about the weekends after an acquisition, when the toughest thing to do is to make the computers talk to each other, so that the depositors at Home Savings or at wherever do not even realize that they're now part of Washington Mutual.
So this is a very intricate effort that took. I had to get these guys to explain this to me in intricate detail because I don't really even understand how it happens. It is so confusing having to combine all these computer systems. But what happened is Lou had hired this fabulous team of people that were just completely aligned at how to make that happen, and they would spend every long weekend during all these mega bank purchases in the 90s making sure that everyone's bank account was working, that no one's mortgage payment was getting lost, that everything was just running along very smoothly.
And they would come in over the course of a weekend, make these things happen. Monday morning, the customer shows up, they don't even know that there's been a change.
Don't even know there's been a change. Yep, it was amazing.
When did the first seeds of destruction get planted?
Seeds of destruction, yes. There were several things that happened. The first thing is that WAMU essentially ran out of banks to buy. It had bought almost every bank on the West Coast, and it was now the country's largest savings and loan. At the same time, there was all this chatter at federal levels about making mortgages to minorities, making mortgages to low-income borrowers. There was all this sort of pressure going on about this type of borrowing. And at the same time, all these other lenders had sprung up across the country making subprime loans, that's when you're making a loan to someone with lesser credit. So WAMU in the late 90s decided it was going to buy this very small lender called Long Beach Mortgage. Very tiny, based out in California. It was almost an afterthought. The mortgage lender made subprime loans. And WAMU thought, well, here's our answer to this problem. You know, we have this tiny division. It's not going to grow very big. We will make these types of loans. We're going to get this business on the cheap because the subprime industry had already sort of gone through a crisis. And that is really when it all started to go downhill.
And just to be clear, because there is this meme out there that the entire financial crisis was caused by minorities getting loans that they really
No,
didn't deserve.
absolutely.
Um, and I know you don't write that,
No.
but this was all banks and thrifts have to comply with something called CRA, and it monitors lending to prevent redlining, which was widespread even into the 1980s. And so uh, the Long Beach acquisition um, would seem to be really good with your CRA compliance, but in the door with that came other things.
Exactly. And, you know, one of the things that everyone thinks about WAMU was that the subprime lending was really the main problem. It was a big problem. But WAMU also, in the late 1990s, adopted this other mortgage product that was equally as terrible, if not more terrible, which was called the option arm loan. And it adopted this product from one of the big banks it had purchased in the late 90s. And this mortgage was just the stuff of nightmares. It basically allowed the borrower to choose their mortgage payment, and one of the options was a minimum mortgage payment. But if you chose that option, the amount that you were not paying was then added on to the principal of your mortgage. Now, you can imagine if you're getting a check in the mail and it says, or you're getting a bill in the mail and it says, which option do you want to pay? Well, of course you're going to pay the lowest option. No one reads the fine print. So that was also what happened at that time as well.
Now, housing prices kept rising, and the conventional wisdom was that housing prices would continue to rise,
Right.
and this helped cloak some of the problem.
It completely cloaked the problem. So the thought was, even if you had one of these option arm or subprime loans, if housing prices were going up, you could always refinance out of it, right? I mean, there was always going to be an exit plan, and housing prices were never going to come down.
And at the same time, you have the push from the other end on Wall Street, because Wall Street, the brainos at places like Goldman Sachs, have found a way to securitize mortgages and then slice and dice them and sell them to quote-unquote investors. And this becomes a worldwide phenomenon.
Right. And what's astounding was the separation between Wall Street and these mortgage operations. So I actually spent quite a lot of time in California for this book. That was really the epicenter of the mortgage crisis, and that's where all the loan officers were out there and all the mortgage brokers making all these terribly dodgy loans. Well, I spoke to so many people who just would continually say, you know, we didn't think that this was a good idea, but Wall Street is out there. I mean, they have no concept of what that means, but in their heads, they're sort of thinking, well, we make this loan, and then someone back there on the East Coast is going to take it and do something with it. And that was sort of absolving them of what they were doing. It
Right.
was just this sort of vague notion that it was going to be taken care of somehow.
And this is after Glass-Steagall has been repealed, so there's no longer a wall between investment banks and commercial banks, and a savings and loan or a thrift is acting more and more like a commercial bank. I was surprised the day I learned that Washington Mutual had a trading desk.
Yes, and a very big one.
Yeah, and this is a thrift. Um, but so the that brings us to the regulatory environment. Where were the regulators?
Where were the regulators indeed? They were not paying attention, to put it nicely. WAMU had two regulators at the time. It was the Office of Thrift Supervision and the Federal Deposit Insurance Corp. Now, the OTS was the main one in the bank, and the FDIC is the one that has its hand sort of in all banks because it's insuring deposits. Well, what happened, and I guess what I'll say continues to happen, is that there were these massive turf battles about who was actually regulating what. So frequently, instead of actually regulating, the regulators were fighting over who was going to regulate. And they couldn't agree on what specifically should be regulated. So one regulator actually did sort of say, look, I mean, we need to be watching out for these option arm loans and these subprime loans. So a group of federal regulators, this is probably in 2005, got together in Washington, D.C. and said, let's issue some guidance that we can give to the banks on how they should be making these mortgages. So guidance is like suggestions. Like they're saying, we think you should maybe cut back on that type of lending. It would be a good idea if you thought about not doing this anymore. So, of course, WAMU didn't pay any attention to that, and neither did any other bank, for that matter.
And it's important to note that the banking industry has spent hundreds of millions of dollars to essentially fix Congress and the White House. This goes back to the Clinton administration. When I was in Charlotte, Bank of America's hometown, the regulators would come to Charlotte to train at Bank of America and at then First Union. That seemed kind of odd to me.
Yeah.
But so we have both turf battles and kind of compromised regulators, and yet the incentives are all in the wrong places as far as the top executives of Washington Mutual to keep taking these risks, right?
Exactly. So what's happening at WAMU at this time, by the way, is now they've become the country's largest savings and loan.
And this is what year?
This is probably, we're in the 2000, 2001 time frame. And Kerry Killinger stands up there and says, okay, now we're the country's largest savings and loan. Now we must be the country's largest mortgage lender. And their slogan, which has been, they've had cute advertising campaigns over the year, have been known as friend of the family, becomes the power of yes. We will make your loan as quickly at any price over the internet. And it's full speed ahead on making sure that they are bigger than Countrywide in particular. They were always trying to be Countrywide. So you just see them transform over the period of 5 to 7 years into this savings and loan bank, from the savings and loan bank into what essentially is a mortgage clearinghouse in which they are sucking in mortgages from all these other banks and from consumers, spitting them out into securities and chopping them up, selling them to the federal government agencies, Fannie Mae, Freddie Mac, to other banks, to pension funds in Norway and Germany and wherever else. I mean, they've essentially become, at this point, a middleman. They're not that bank anymore that's sitting there with a teller making you a mortgage.
And the head shed gets rich off this.
Exactly. So going back to the incentives, so Kerry Killinger along the way at the very top levels and all the executives below him are of course making more money all the time. Their salaries are increasing every year. Now at the middle level, or at the low level, I guess we'll say, of the loan officers and the people working associated with the mortgages, they're just getting paid a ridiculous amount as well. I mean, I spoke to this one woman quite frequently in Southern California. They called her the billion-dollar baby. She worked in the bank's warehouse lending division, and she was making 7 figures. And she knew, she literally knew that she was making loans that were bad, but she was getting paid an astronomical amount of money, and everyone else she knew was doing it.
And then suddenly housing prices start to collapse.
Yes. There's one of the actually the saddest parts for me in the book was I spent a lot of time with Lou Pepper, the former CEO, and he at some point starts seeing this crisis coming, and he starts writing these long letters to Kerry Killinger and other members of the executive team. And he's retired north of Seattle and near Anacortes, and he's driving, he tells me this story, he's driving his car one day back from lunch in Anacortes, and he's parked at a railway station, and he sees this train go by, and the train is carrying all this wood. And he sits there for like half an hour, watching car after car filled with wood go by, and he's thinking, is this wood going to build houses in California? I mean, it's coming from Canada to build houses somewhere. How can we possibly be building this many houses? How can we sustain something like this? And he drives back to his house and types out this letter warning Carrie, we've got to get out of this market. I mean, this is terrible. It's about to collapse. I mean, he's not even affiliated with the bank anymore. And he gets this literally just from watching a train go by at a railroad station. And needless to say, he didn't get a response on that letter.
How did Kerry Killinger, the Wonder Boy, guy from a very middle class, even working class background, sympathetic character, at least early in the book,
Yeah.
how does he end up in this situation where the at least the Titanic had a band? Uh, how
He could have played the trumpet.
That's right. Or he would have been one of the ones getting in the lifeboat and casting off,
Yes.
leaving the women and children behind. But
Right.
I'm a columnist. I'm allowed to have an opinion. Um, but I mean, how much of this is hubris and bad business practices, bad risk taking, confusing a bull market with genius, and how much of this is it's a lot more complicated and we shouldn't hate Carrie?
Well, I would first of all go with the it's complicated answer, but I'd follow that up to say Carrie Killinger's own personal story is very important to what actually happened at the bank. So he was this very humble guy. He turned into America's favorite banker. And then he began to believe his own press, to be honest. He divorced his longtime wife of 30 years. She was really responsible for keeping him grounded.
And this
All-
is Debbie.
This is Debbie, yes. All the executives knew her. She was, she was sort of this grounding force. He remarried, and at about the same time, Linda, he remarried, and he had long said, we never fly corporate jets at WAMU. We would never do anything like that. They used to come into these savings and loan banks in the 90s and get rid of like corporate memberships and all the cafeterias and the plants and like anything that was remotely flashy. Well, here comes Carrie, starts flying the corporate jet all over the country, starts holding these giant like brand rallies for WAMU customers everywhere, which were essentially just like giant, we love Carrie fests everywhere. So he's sort of like flying around the country in his corporate jet with his new wife as the mortgage division is growing astronomically, and everyone out in California is sort of having a heyday. So he really began to change. And separately, he always had a huge issue with confrontation and dealing with problems, and that began to really show itself.
In as much as not wanting to.
Yes.
Now, when the financial panic begins, we have a bank jog here that is turning into a bank run.
Yes.
As things continue to deteriorate nationally, Ben Bernanke, Tim Geithner, you know those guys, Hank Paulson, who was Bush's Treasury Secretary, they adopt policy, and even Sheila Bair adopts this policy that says we'll save everybody. We'll make everybody whole. Unfortunately, I mean, on the taxpayer's dime, you're welcome. Unfortunately, this happened after Washington Mutual was closed in the largest.
6 days after.
Yeah. And I have always thought this was a terrible tragedy, not only for this community, because the wound is so deep, and the damage, the economic damage, and the personal damage is so deep here, but also because the too big to fail banks got bigger as a result of the crisis. It was good to have a major financial institution in Seattle. Uh, Jamie Dimon got just what he wanted in for a song, and so here we have a situation where the real banking industry, in other words, J.P. Morgan Chase, Citibank, Bank of America, and before they bit the bullet, Wachovia First Union, they have the political power. They've spent years and hundreds of billions of dollars getting Washington's ear. What about Washington Mutual?
Political power is such an important factor in WAMU's trajectory, way more than we could have ever known at the time here in Seattle. So again, this comes back to Kerry Killinger. He had never placed a premium on dealing with Washington. You know, all the other bankers were out there making friends, going to dinners, having fun. Kerry would occasionally go out there. Usually he was not really at the big dinners. He just didn't put a big effort on it. And to be honest, you can argue theoretically whether that's a good or bad thing. Should companies have to have these relationships in Washington? Well, as it turned out, during the financial crisis, they absolutely did have to have those relationships, because Kerry suddenly found himself, as his bank is suffering this massive bank run in the summer of 2008, with no friends in Washington. And there's this moment. So earlier in the spring of 2008, J.P. Morgan Chase had tried to buy WAMU, and WAMU turned them down in favor of private equity. And then they begin to suffer this bank run that no one hears about in the summer of 2008. And Kerry calls up Hank Paulson and says, "What can you do? Can you help us out?" And basically Hank Paulson shows him the door and says, "You should have sold out to Jamie Dimon." And that sort of is what happens when you don't have any friends in Washington.
What are the one or two most important things that you want readers to take away from your book?
There's a lot I'd hope people take away, but one of them is just that the story of WAMU, I really tried to make it a mirror of what's happened to our banking system. It's one story, but it's sort of a reflection of where we are now. There's so much anger still. What happened? Why are taxpayers still on the hook? Why are we still seeing all these bankers in front of Congress explaining their risk-taking? I really want people to see from this book how we moved over the course of only really like 20 or 30 years from this system of much smaller banks that were more customer focused into what we have today.
And highly regulated.
Yes, exactly.
Because there was Glass-Steagall.
Exactly, yes. And there were also regulations prohibiting banks from really growing across state lines, which
Right.
also made a difference as well.
And
Yeah.
after the S&L disaster,
Yes.
the OTS was specifically put in place
Right.
to avoid a Keating 5, et cetera,
Exactly.
and failed in that. So what else do you want them to
There's
know?
one other thing that's really important about WAMU's story that really you can't ignore in any company culture, which was its values and its company culture, and how it changed and eroded so much over time. I don't think you can pay enough attention to that at a company. Recently, we saw in the New York Times that Goldman Sachs executive come out with that Jerry Maguire style letter talking about how terrible Goldman Sachs was and how the culture had really been eroded. Well, that same sort of thing happened at WAMU, and you can see that happen at companies that are so focused on growth and market share. And I just really hope from reading this book that, employees and executives will sort of be able to see that and recognize how important it is to keep a culture alive at a company.
And maybe reinstate Glass-Steagall and things like that.
Maybe that too, yes.
And maybe find a way around Citizens United.
Absolutely.
Where was the board of directors?
The board of directors had been very lulled by how good WAMU's performance had been for so many years. And they they really were not paying attention, to be honest. I mean, some of them were paying attention and at the end sort of realized what was going on, but they were a board that was controlled by Kerry Killinger, who is chairman. And so they really followed and listened to everything he told them. And towards the end, what he was telling them was just not what was actually happening.
And shareholders were wiped out.
And shareholders
And you
were
tell
wiped
that
out.
story through a couple in Thousand Oaks, California.
Yes, exactly. They were all wiped out.
So to write this, they just handed you all the documents and
Yeah.
copy machine
Exactly.
and it was a couple weekends of writing and
Absolutely.
you were done.
That's just how it went. I in fact just wrote it last weekend.
Okay. So really, how difficult was it to really get to the bottom of this thrift failure?
It was incredibly difficult. So we actually started at my former employer, the Puget Sound Business Journal. That we decided we were going to figure out like how this bank failed, right? Why did WAMU fail? That was the big question. And so we requested from the federal regulators all these documents. We wanted emails from Sheila Bair, who was the head of the FDIC, and the other regulators showing what was actually happening in those last weeks before WAMU failed. And instead, we just got back hundreds of blacked out documents. Hundreds, so much so that like we just couldn't resist putting one in the book, to be honest. So there's a nice sort of art. That's the only art in the book is the blacked out document. But separately, it was very challenging interviewing people as well, as you can imagine, because the story is still very controversial, especially back east in New York and Washington. Those guys just would rather WAMU would go away with no questions asked.
That?
Well, because in the eyes of the federal regulators, WAMU was a quick and easy deal. They shut it down, they sold it to JP Morgan Chase, didn't cost the deposit insurance fund a dime. They were done. They were moved on to the next company. So they'd rather it just go away. And to be honest, they've really just not paid any attention to the effect it had on Seattle or the Pacific Northwest or anywhere, actually having closed that bank. And afterwards that decision was very controversial. Fed and Treasury officials have come out saying we shouldn't have closed the bank. It actually ignited a run on Wachovia the next week.
Right.
TARP was passed only 6 days later.
And they had swallowed a big mortgage lender.
Exactly, yes.
And it just so happens that the commercial banking industry, which never wanted the S&L industry to survive after 1990, got rid of the biggest S&L.
Mm-hmm. Yes, exactly.
And there was a healthy part of Washington Mutual.
There was. This is what a lot of people, I'm glad you brought that up. A lot of people don't understand. I mean, so they had this mortgage division that was basically like a cancer. But then they had this whole rest of the bank that was still filled with these great people that were often doing fantastic work.
That Jamie wanted.
Yes, and had no idea what was going on in this mortgage division. I'll never forget one of my favorite things that someone told me about the mortgage division was they compared Kerry Killinger to a little old lady holding a giant Rottweiler, which was just exactly how it was. I mean, it was just the rest of the bank was this sort of like happy, like, they were still very, very much the WAMU we used to know.
Well, I remember in Phoenix, before I was thrown out for calling the housing bust, in my neighborhood in the historic district near downtown, a WAMU branch suddenly popped up. And I always liked Washington Mutual. I thought that had a certain dignity. But anyway, at the little street fair in this historic district, WAMU has a table. The WAMU manager is there. And this is around 2005 or so when the woman who cut my hair was flipping houses and buying houses on no-doc loans. Joe Kennedy's moment where he's getting stock tips from the shoe shine boy. That was my Joe Kennedy moment. Um, and this was where I first noticed WAMU. But now I just think that's incredibly strange because here's all these mortgage boiler rooms are going on in Phoenix, which is the death star of the real estate collapse. It's still in a depression. And I didn't know I would go to Seattle because I didn't know I was going to get kicked out yet. But here was WAMU.
Right, exactly. And what's so interesting too is when J.P. Morgan moves in and takes over the bank, you just see this rapid transformation of culture. I mean, it's like night and day. Like J.P. Morgan moves into WAMU, they're all in their three-piece suits, like ordering expensive meals, like with silverware and on their Blackberries, and like everyone at WAMU was sort of like, New York's coming, like just joking about how they were like the classic stodgy bankers. And now you can see that. That old sort of quirky WAMU is completely gone. It's now just this row of ATMs with the Chase logo, and it's just different.
Well, I've interviewed Jamie many times, and he cursed at me every time, which is a sign he likes you, actually.
Yeah.
But yes, they know how to take over and assimilate into the board.
Yes, absolutely.
And well, I don't want to get in the way of the questions that the crowd has. Kirsten, welcome back home to Seattle.
Thank you.
You've written a magnificent book, an important book. People need to read it, and people need to absorb it, because if you think we're past the trouble with the banking industry, think again.
You can follow me on Twitter, however. My handle is Kirsten Grind.
The other question I have is about Home Street Bank. Home Street Bank didn't sell any of their mortgages for a long, long time. Then they suddenly sold all their mortgages, it seemed. And then they suddenly had a crisis, and now they're, it seems, barely hanging on. They brought a new CEO in. It's so sort of similar to Washington Mutual. I'm trying to figure out why they didn't see the model and not do that.
Well, I would actually hesitate to compare Home Street to WAMU, to be honest.
I would too.
Yeah, I think it's a very different situation. What WAMU was going through was on a much larger scale, and what Home Street is facing is sort of a symptom of the larger financial crisis as well.
Okay, thank you.
Yeah.
Let's go to this side.
Do you have any details about, I think it was a hedge fund from Texas that invested $1 billion in WAMU and lost everything?
I don't have any.
There was a big investor from Texas, some type of fund, and he lost everything.
Do you mean the private equity firm that invested money right before WAMU failed?
Yeah, maybe that's it.
Yeah, so TPG was a big private equity firm that invested $7.2 billion into WAMU in the spring before it failed, obviously not knowing that the bank was going to fail later that year. So they were actually completely wiped out, and it was quite a mar on the reputation of the head of TPG, David Bonderman, who is widely known as this great financier.
Yeah, and TPG had a great record.
They had a great record until WAMU.
And it's interesting, I'll just throw this in quickly. Had there been more regulatory leadership when TPG made that investment, we might still have WAMU.
Absolutely.
Yes, sir.
What were WAMU's risk managers saying at the time when all this stuff was going on?
That is a great question. So WAMU actually had some terrific risk managers. They were sounding the alarms. They had one risk manager until about 2005. His name was Jim Vanasek, and he was constantly marching into Kerry Killinger's office, warning about these risky mortgage loans. He had actually suggested that the bank take out a full-page ad in the Wall Street Journal saying, we're not doing any of these terrible mortgages, we should move away from this. He got up at conventions and said, we need to make sure we're not just saying the power of yes, we should be saying the power of no. But, this was 2005, and everyone was still really very much going forward with this. And so he wasn't getting anywhere, and the mortgage division was winning, and he eventually retired.
and the securitization was going full bore.
Yes.
And just to make the record clear, this was not being driven by Freddie and Fannie. This was being driven by Wall Street that was taking these mortgages and securitizing them, and the appetite was huge because on Wall Street the thought was, with all these Harvard MBAs and their algorithms, that this stuff can never go wrong.
And they were often dictating the demand, right? So even before the production side of WAMU would make loans, Wall Street would be behind there saying, we need X amount of loans. Go make them. So you can imagine if you're trying to fulfill that quota, it's not going to end well.
Yes.
I wanted to thank you first for following the FDIC settlement last year. And I noticed that a few days before Christmas, the suit was written down tremendously. And I wondered if you could speak to what motivated the FDIC to really avoid pushing forward with executive penalties. Those are written down to just above executive liability insurance coverage, I believe. So Kerry Killinger and the other two executives that were identified in that suit basically held on to their tens of millions of dollars that they made.
Or they got away with it.
Yeah. That
Here, I mean, it was a historic FDIC suit. What would motivate the FDIC to put that suit, but then go to pennies on the dollar in their settlement?
Well, I think part of the problem with that
Can you give
settlement.
a little background in the suit?
Yeah. So, okay, basically the FDIC launched this very unusual lawsuit. It was unusual because the FDIC did not lose money when WAMU collapsed. And so the FDIC filed this complaint against Kerry Killinger, Steve Rotella, who was the president of the bank, and David Schneider, who was the head of the mortgage division, and the Kerry Killinger's and Steve Rotella's wives, incidentally, and said that we're going to sue them for $1 billion collectively, which was this astronomical amount of money. And they were claiming negligence on the part of them running the mortgage division, and it was very unusual for the FDIC to bring this suit because the FDIC hadn't lost any money when it took over WAMU. Now, the reason that it got settled is, of course, again, because of the politics behind the scene. But basically, another large lawsuit was going forward at that time, also against the mortgage division. And basically what happened is they all had this director's liabilities insurance policy, and all of a sudden everyone involved in all these various suits was worried about draining those policies. So they were all trying to settle at the same time. So that forced negotiations with this FDIC settlement. Now, why they were able to get off without paying almost anything, that I don't know.
Or returning compensation.
Yes, that I actually don't know.
No clawback.
Except to say that they have good lawyers.
Yeah, well, yes, sir.
You've kind of answered some of this with the questions that just came up, but I wondered in your investigation, and I don't think this is probably something that you could get to easily, or maybe will never be gotten to, but I was wondering if there was any chance that WAMU was kind of given to J.P. Morgan Chase as part of something that might have been kind of a backdoor deal, backroom deal that for some other favors that they were going to get out of J.P. Morgan Chase as a result of this deal.
Well, that's a really good question, and it's actually one I spent a long time exploring. And in one of the chapters in the book, I actually spend like a very long time laying out exactly what each party, J.P. Morgan, the FDIC, was doing in those final weeks, so you can see for yourself sort of whether or not there was any backroom negotiations going on. Now, as to that question, did they get WAMU, say because they took Bear Stearns off the government's hands? I never found any sort of smoking gun of Jamie Dimon emailing Sheila Bair saying, "Thanks so much for letting me have WAMU because I took Bear Stearns," or something like that. I never found anything like that.
Jamie.
Yeah.
Profanity.
Right. I will actually say, though, that there is no love lost between Jamie Dimon and Sheila Bair. I don't get the sense that they like each other at all. So
There was a tremendous amount of desperate improvisation going on
yes,
in Washington, D.C. at this time. The problem is that Washington Mutual should have been stopped and saved earlier, and then after the crisis was over, then you get into saying to J.P. Morgan Chase, okay, it's time to break you up because you are too big to exist. But I have not found any smoking gun either.
Follow-up to that, my memory of the events leading up to the takeover by FDIC of WAMU, wasn't there a possibility that there was some information leaked about the FDIC concern over WAMU that accelerated the run on the bank? And was that normal FDIC procedure, if my memory is correct?
That is possible. What it actually did is it more than accelerated the run on the bank. It affected, because what was happening during those frantic times, and again, I go into this in extensive detail, is the new CEO of WAMU was trying to sell the bank on the open market in a normal sale. And then you had the government secretly trying to sell the bank for a distressed asset price, right? So at some point, you know, the same companies are involved in both sales. So when you have the government telling the companies, okay, this bank might fail and you might be able to get it really cheap, why would they buy it normally?
Exactly.
You know what I mean? And so that sort of thing was happening, in which the CEO of WAMU at the time, Alan Fishman, who by the way was there 3 weeks, he was undermined by what was happening on the government level.
Am I right, though? Did it leak out and accelerate the run?
They've
that
never
this
been
was
able
going
to
on?
prove that. There's a suit that speaks sort of to that, but WAMU's run was mostly caused by the collapse of Lehman. That's really what sparked that run in September.
Thank you very much.
Yeah, absolutely.
Yes, sir.
So what can you tell us about where the executives who created this mess are now, what they're doing, and what they might be thinking about? That's the first question, and the second question is,
Not
when
in
will
a
your
federal
book be out?
penitentiary? I'm shocked.
Excuse me? When will your
I
book
said
be out?
not in a federal penitentiary? I'm shocked. And your quick second question is?
When will your book be out?
Oh, well, I'll answer that one. It is out now. So
That's why we're here tonight, sell book.
they are doing well, the WAMU executives. Carrie Killinger still lives part of the time in Seattle and part of the time in Palm Desert. Steve Rotella is back in New York. He sold his house here. And they've not emerged in any business leadership type roles. They're laying low. David Schneider, the head of the mortgage business, actually finally lost his job at J.P. Morgan Chase. He was there right after the bank absorbed WAMU, and actually kept his job until just a couple months ago. And now he's at another, I think, smaller mortgage servicer. So they're still at large.
And the shareholders were wiped out. Yes, ma'am.
I was one of the people who worked for Lou Pepper, shall we say, back between 78 and 80-something. And so was very aware of the culture of the time. It truly was. I mean, we were pushed to understand that it was a friend of the family, and I was in the computer department that was getting the new acquisitions up and running. It was a fascinating job. But I want to come to the defense of Chase Morgan, because I go into the branches. I still have an account there, and I see the culture that we had when I was there, the way they treat the customers, the way they treat me when I come in. So it isn't entirely lost. We're still Seattle. And if they hire Seattle people, they get Seattle people that feel that way. So I'm coming to their defense on that.
Well, that's great.
Now, I mean, you said you had this dreadful feeling about how Chase treats its customers now.
That's
I
just,
don't think she said that.
yeah,
Okay.
no. It's just a different culture at the actual bank than it was at WAMU.
For
You know,
employees. And the other thing
Right.
that you have to remember is that Seattle lost thousands of well-paid headquarters jobs that are not here now.
Oh, yeah. I'm
And
not gonna
Seattle
discount-
lost an entire ecosystem of vendors and CPAs and law firms that depended on having this major corporate
Yeah.
headquarters. But I don't think anybody said that the customer service at J.P. Morgan Chase is bad.
Yeah.
Jamie, are you getting this in the chip you have in my head?
I'm actually,
No, master.
What I'm saying is there's still hope.
Luke,
no,
I am
absolutely.
your father.
I'm happy to hear that you've had a good experience there. That's great.
Yes.
I wonder, is it your conclusion that WAMU failed because of a classic run on the bank, that their balance sheet was strong, it was just a liquidity event? Or do you believe that their balance sheet was really bad, they had, you know, a huge number of non-performing loans, and that really what caused the demise?
To be honest, I haven't actually come to a conclusion on this myself because I can see both ways. If WAMU had been allowed to survive at the point that it was taken over, there's no question that it needed something. It needed either the government bailout that all the other banks got, it needed to be sold, parts of it needed to be sold. Whether it could have survived past the day that it was seized, absolutely it could have. But for how long, that's what I don't know. But it was the run on the bank that ultimately got it down.
That's even a more damning comment than anything else we've talked about tonight, it seems, that if really it was just fear that
Yes.
caused the market to turn against the bank.
It was complete panic.
If they really did subscribe to the greater fool theory and sliced and diced all the mortgages and didn't end up holding them, then it wasn't their balance sheet at risk.
Well, and that's a point that they made very clearly, is that when the bank was seized, it was still well capitalized. That's an extremely important distinction to make. So that's a very good point.
And remember, the commercial banking industry came in and said, we want to do away with mark to market, so that whatever assets we have on the books are the value that we say they are, and they had the Fed buy trillions of dollars in everything to get it off their books, toxic assets. Remember that. Nobody did this for WAMU.